Amazing. Hey everyone, welcome back to the weekly watch list breakdown for the week of April 28th. This week's lineup includes SPY, Qs, IWM, as always, as our main focus or way of measuring the overall breadth of the market, with an additional focus on three specific stocks: PayPal, XOM, DIS. PayPal and XOM have both made an appearance in the past two iterations of our weekly watch list, with this being included, or the new one for this week. And it will be the one that we're mainly focusing on when it comes to that overall breakdown of the chart, or charting it from scratch in comparison to all of the other tickers that have already been charted, and we've already provided that in-depth breakdown of our targeted supports, our targeted resistances, supply and demand zones of interest, all posted in the Discord already. So let's go ahead and get started here. I will go ahead and bring up my chart so we can go through those breakdowns, those levels for each ticker, as shown or posted in the actual Discord session. So give me a quick second here, and let's go ahead and switch our screens. There we go. Sweet. So you should now be seeing the entire breakdown for my SPY chart here. Hopefully, it encompasses everything up until or back around like January time. So I'll go ahead and give as an in-depth breakdown as possible, as I can, for this chart, and the reasoning why I'm looking at specific things. And actually, let me bring that over here. Amazing. Sweet. So when we take a look at SPY, if you had the time to go through my overall breakdown, last week we had about 5.5 or 5.63% to be exact, increase across that 5 day span. So across the week, some of the key levels that I am taking a look at when we are looking at support, of course, 549. Then I am looking at um, 543, 540, 536. When I'm taking a look at the upside, I have listed resistances of 555, 558.14, 560, 565, those psychological levels, and 569.12. So I know that these are just numbers being thrown at you, right? When we're talking about levels. But if you take a look at what we charted last week, essentially, what we were looking at is this lower range being traded, right? We saw the breakdown, this bounce from 313, the bounce from 331, and then the drop at the beginning of April. So essentially, what we've been doing since the beginning of April is we've been trading in this lower range, under where we saw these one, two, three previous bounces, right? So this zone here, when we're taking a look at 543.26 to about 549, that was a zone that we identified on the 4 hour chart as far as our roof, or the overall resistance that we were seeing in this current range, right? Because what we're doing is we're breaking up the chart into different ranges and seeing where trading price found a floor, where trading price found a roof, and essentially you're just creating those segments, right? Or you're bracketing those different ranges. So in the past month, what we've been doing, again, we've been trading in this lower range, and we've seen a low here of around 480, which was essentially touched twice, right? This zone. And I know that last week we talked about, well, how are you identifying these, or how can I have confidence in these specific zones? Before we even go into the white ones, well, the range is what we just discussed, the top end here and the bottom end here. And actually, let me look at some of these indicators. I'm gonna take them off for right now because I want to look at just the naked chart, right? Price action itself. So taking a look back at this upper zone and lower zone, or supply and demand, the reason why beyond just these three bounces here, if we run it all the way back, right? Because all of this, there's a reason why price action is attracted to these, or why these act as magnets. Let's bring it back here, right? So we saw this back in September of last year. We saw good price action there, right? If we keep, oh, I moved that zone. If we keep running it back, you see continued price action, right? Or you see continued reaction, whether it's a breakout of this zone, a retracement, a hold, a pop, resistance, right? So over time, it'll keep turning back and forth between support and resistance. And let's bring back these as well. We don't even have the like set levels for that charted just yet or listed. They're literally just zones that we eyeballed and that we were able to use, and see how when we extend them across time, you see that price action, or candles reacting to them in a certain way. Whether at this point it was creating a consolidation, right, and a demand. Let's now go back to the front of the chart and pull this back over here. So that's why I was really confident in establishing that range, is that I've seen price action live within that specific range for a significant amount of time, or I've seen significant moves happen, right? Those breakdowns, those breakouts, those bounces, those rejections within those specific areas. So having seen that rejection, bounce, the attempt to break it with news and the rejection, it again just verified that range where we know that on the top end there were sellers ready to just offload shares, and at the bottom there were buyers ready to snap those shares up, because at that point price was deemed fair value. So when we were taking a look at overall price action during the week, yes, there was weakness, right? We saw retracement into the 21st. And what day was that? Actually, that was the first day, right? So we did see that initial breakdown retracement, but that second 4 hour candle, what it did, it didn't break back above this range here, but it brought us within distance. And the reason why that was significant to me, and why we ended up picking up that SPY contract of 515, was because we were inching back up towards what would this be if you're just eyeballing it, to take the time to think about what this specific range or zone um, is representing. To me, what it was representing is the midway point of this overall range, right? This 4 hour range, the top and the bottom here. This is the midway point. And as you all know, within the Discord, the purple levels that I have here, those purple levels are all coming from the weekly time frame. So if you keep into consideration my personal trading style, it's all based off of reaction to higher level time frames. So I'm looking specifically at the weekly charts. I'm looking specifically at the 4 hour charts to find my supports, my resistances, my supply and demand zones. Yes, I'm trading, or I'm executing my trades on the 15-minute and the 5-minute chart, right? So when I bring this breakdown over to the 15, in the 5 minute charts, it looks like this, right? Those levels look a lot wider. So what I'm doing essentially in order to limit my exposure and to limit the feeling of like, oh man, I need to execute a trade, what I'm doing is I'm being as patient enough as I can to wait for ultimately, I know where I'm going to get the biggest move is when price action tests one of these lines, whether it's a test of the downside support and we get a bounce, or it breaks down and potentially a bleed down into these lower levels, right? Or a bounce up to test this, or if we're inching up, when price hits this, well, what does it do? Am I seeing volume continuing to increase, or is volume dying out as it's testing this? And it gives me potentially an opportunity to trade a rejection of this, right? And enter a short rather than a long position. So different ways to digest price action as it's happening, but I'm only executing mainly off of those weekly and those 4 hour time frames because that's where you'll get the biggest moves because there's a larger amount of data collected within these levels, within these zones. So I know at this point, it looks a little bit the chart that I'm presenting, it looks a little bit more cluttered with all of these levels and zones in comparison to last week, because last week I was solely focusing on, or mainly focusing on these 4 hour zones and the weekly levels. I added a few 4 hour levels for myself for the upcoming week because I'm potentially looking to execute a couple additional SPY options contracts, depending on what the market gives us. But one of the main reasons why SPY is one of the main ones that I'm looking to figure out what contracts are viable for this upcoming week is because of overall market sentiment. So when we take a look at current market context, and this will be very similar for Qs as well, is the fact that we had big players, for instance, Google surge last week with its earnings exceeding expectations, right? Kind of reigniting that bullish momentum or the feeling that, hey, we're potentially at a good spot. And it's not it wouldn't be drastic or unrealistic to say that we could potentially start to eye this upward or this upside weekly range, right? These are two purple levels. So for me, this was identified on the weekly. And just to make that clear, let me change this overall color here as well. So this is a weekly zone here. So when we're talking about trading within ranges and finding these bounces, rejections, whatever it might be, what happened, right? At the end of the week on Friday, what happened when we take a look at or keep into consideration the range that we were trading in within the past 2 weeks? we broke we broke range, right? So we're no longer trading this downside or this lower range. Now we closed above that range on the 4 hour time frame, and we are now looking at a range between 543, 549, now considered or could be considered demand, right? Buyer interest here, as long as we consolidate within these levels. And if we do so, yes, we got a weekly range here as well. And I can go ahead and even give you a midway point here to keep an eye on. Let's go ahead and lower that right there. That's what I would eye. An initial bump or push into 564.46, essentially 564.50, 565 is what I would be aiming for by midweek. So around like Wednesday, even Thursday, depending on how slow or how much volume influx we see in the market. So I bring this specific point up because that's probably the contract that I'm aiming for. As we see price consolidate within these areas, if we hold this area of demand or this zone, I am going or very likely to enter next week 565 contracts and see how that plays out. It wouldn't surprise me if we have a down day Monday, Tuesday, or not necessarily a down day, but consolidation within this range here, 549 to about 555, right? Just given the price action here. And the reason why I say that is because think about if you're thinking about this as floors and roofs, you have to keep in mind we had the bounce here, right? The triple bounce. So there's people positioned in these areas that then saw that initial entry get not necessarily wiped out, but it went negative, right? So now we're poking at the roof of this upper range. So it might take a good amount of influx or a good amount of upward momentum within the next day or so to break above. But once we start to break above here, the 555, 50-ish area, very likely or very probable that we will touch and break 565. So definitely big things to keep in mind. And in relation to that, or what gives me that sort of confidence is that overall, you're starting to see the market and kind of get this feeling of cooling inflation, right? Based off of the reports that we're seeing certain indicators. So this all comes from the softness of a lot of the macro data when we have seen like CPI jobs reports, which we have some reports coming up this coming week. Overall, it hasn't been increasing at a point where we deem it to be bad. So the market continues to take it as a good sign. And overall, just the optimism between potential rate cuts later in 2025 is driving this sort of excitement or the push to the upside. When you take a look at those macro factors, keep in mind that the Federal Reserve does meet this week. If I'm not mistaken, it will be on May 1st. There's no rate change expected or any sort of rate cut expected for this meeting. But overall, what we're looking for is guidance that Powell gives as far as what is his tone, what are the things that he touches on specifically, how does he answer certain questions that are given to the Fed during that meeting. So an overall dovish or excitement behind his speech is definitely going to fuel an extension towards this upper range. So we could see another 20 or so dollar move within the next 1 to 2 weeks, dependent on how this Fed meeting goes and the type of conversation that drives that specific meeting. But if we start to see some sort of like tilt towards the reserve or the like hawkish side of things, then that could bring us back down to this lower range. So things to keep in mind in addition to that Fed meeting in relation to Qs as well is incoming earnings for what you would call large cap or even mega cap stocks, right? When you take a look at companies like Apple, Amazon, AMD, they're all set to report within the next week or 7 to 9 days. So definitely keep an eye out on those. Any sort of weak reports could trigger a retracement back into the lower range that we traded in the past 2 weeks. We do have non-farm payrolls, if I'm not mistaken, situated for May 3rd. So labor market data could swing those Fed rate cut expectations one way or another. Overall, when we take a look at indicators, right, if you're beyond the candles, wanting to have a more in-depth breakdown of what might be going on, I recommend at least looking at the moving averages. So what you see on the chart now are specifically the 5 day moving average, which is the purple line here. It might be a little faint, so let me zoom in a little bit just so you all can see that a little better. The orangish line right below that, that's the 10-day moving average. Below that, the blue one here, that's the 20-day. The green one here, that's the 50-day. And the orange one here, that's the 100-day moving average. So the reason why I brought all of these up, or all five of them up, is that we've seen during the past week all of these moving averages start to swing to the upside, meaning that when you take a look at volume, momentum, overall, it's been increasing. Specifically the last 2 days, on Thursday and Friday is when we saw a retracement back down to the 100 moving day and just launched off of it, right? It held it. And what we're seeing now, depending on how price trades on tomorrow or Monday, we might see the 50 moving average now make its way above the 100-day average, right? So when you think about how our indicators traded, specifically the moving averages, when you see all of these averages stack on top of one another in a descending order, that's what's showing you the overall bullish momentum. So that push above it's signaling that upwards momentum. So we'll see if it holds. I don't completely rely just on the moving averages, but to me, it's just a really good breakdown of what's been happening over the past 5, 10, 20, 50, 100 days, and where's momentum pointing towards. So what you see here, again, that's the overall breakdown of the 4-hour chart. We'll go ahead and take a look at Qs now. Very similar, right? It's essentially SPY, but tech. Really just the tech indicator indice, with SPY holding a little bit more than tech, but essentially they go hand in hand. They're almost mirror copies of each other, being that tech is very heavily weighted within SPY itself. When we take a look at Qs, last week performance up 7.8% on a week over week basis. You saw that whole breakdown. When it comes to support and resistance, or the key levels that I'm taking a look at, they're all listed here for you. Same thing as SPY. We're breaking up and we're breaking into the upper range, but dependent on those earnings, being that Qs is very tech heavy, Qs might be the one that leads, right? It might be the one that launches in comparison to what we saw IWM do last week. So Qs could be the leading indice this coming week, whether it's leading to the upside or leading the bleed to the downside. It could be the leading one to keep an eye on. If you are looking to trade SPY or one of the others, make sure to check out what that relationship is looking like between the three in this upcoming week. So specific supports that I am initially eyeing are 471, 470, right? Those initial psychological levels to the downside. The zone that you initially see here are 465 to about 467. I have 467.34. You can call it 467.50 if you want to go the round psychological number. But the reason why I'm trading this specific range and why it's so refined, or why it's a tight range for me, is that essentially what I did, and it lined up pretty well. It's the top of the 4-hour candle body from Thursday, and it's also the start point of the 4-hour body for Friday. And if you run that, what was this? It was the roof for the trading day of 414. It was where that rejection happened. The day where we saw the pause announcement, or I believe it was that the tariff pause announcement on 4.9, yes, we broke slightly above it, but we rejected that zone. When we take a look at 4.2, look where that initial 4-hour body landed, right? Right in that area. Very similarly, the day before, April 1st, it dipped below that, but it held that range. It was ultimately the roof of that first 4 hour candle on 331. If we extend it, look at those bodies, right? Perfectly in there. Those bodies as well. It came down to touch it, but it bounced off of it. So to me, that's showing that there's a lot of price action going on in that area, whether it's seller interest, buyer interest at any point in time. So this is what very similar to SPY, that was the roof, right, of that initial lower range that we were trading under. So now we've popped up, and look at this in comparison to what we saw in the SPY chart, right? It was significantly, it was a significant pop or amount of price action that we got above that lower range. So in relation to SPY, Q's is actually at the midway point, right? If we come back to SPY, remember that SPY, the midway point of this upper range, is actually closer to here, right? 558-ish. So SPY still has some room in comparison to this range that we're seeing here um, build in Q. So what I'm aiming for is a top of around 486. But again, dependent on Q's reporting, when we take a look at those big tech heavyweights, we're very likely to see a push to 492, 496, or 95-ish area up here. I'll actually mark that for us here. And this is the main zone that I'm interested in on the 4 hour time frame. Depending on how data goes, we could be looking all the way up here, right? So that would be similar total dollar amount that we're looking for, potentially a $20 move within the next week or two, both in Qs and SPY. So to the upside, those resistances were 473, 475, 479.15, 482.27, 486. The main ones that I'm looking for, right, or looking at in this initial push to the upside. If we do break 486, keep 496 in mind, because it definitely is a possibility with Tesla and Meta earnings being kind of weakish the past few weeks. That was very interesting because what happened, the market kind of ignored it, right? Tesla had a bad day, but Tesla also bounced. So definitely, big thing to keep in mind is how will the market react, even if these companies don't necessarily have a big earnings, if they miss earnings or not. But I'm very interested in particularly Apple, whereas I think Apple disappointment will see Qs sell off pretty significantly. If Apple beats, I think that we will break for 80 pretty easily. And I actually have to fix that on the Discord. I think I put 460, but I meant to say 480. I think we break pretty easily. So keep in mind again, non-farm payrolls and the fact that we have these meetings in place. So let's go ahead and take a look at some breakdown for IWM here. When we take a look at IWM, key levels 192.44, 190, 189.69, 188.37, 185 when we're looking to the downside. And these are all listed here. These are all 4 hour levels actually that I pulled from this chart, not necessarily the weekly. The weekly is a little bit different for me on IWM, because essentially what I'm looking at on the weekly level, I'm mainly concerned or emphasizing this lower range here, which was the initial breakout from COVID 2020 lows up to that 205 mark. So we're trading in this lower range, essentially that it was established since, what is this, November 2020. Yes, we broke above it, but we've held consistently. Here we broke above it again, but essentially this was a double top, right? That all-time high didn't hold. So I'm really interested in seeing whether IWM breaks out of this consolidation or not. Because very similarly, we saw it consolidate. This was when SPY and Qs were running and running all-time highs. Small caps just consolidated from February 2021 to about a year's time, right? January 2022. So I'm very interested in seeing how this specific indice or the small caps overall hold up between the next year or so in comparison to SPY and Qs. To the upside, resistances I am eyeing are 195.23, 196.80, 199.12, 200, 201.61 as my main area of interest, because again, if Qs runs, if SPY runs, if the overall market continues to move congruently, then we're going to get a test of 205. So if I'm thinking about trading IWM specifically, what contracts do I have in mind? If I'm thinking about like a week's time frame, I am thinking about, if you can, 195, right? But that's the closest one to the money, so it's going to be pretty pricey. But if we're taking a look at above that, definitely keep an eye on 200 and 205. Those are probably going to be a little bit more affordable because they're further out the money, but it wouldn't be unreasonable to see market move in that way. Unlike large cap and tech overall, what IWM has benefited from, if you take a look at its overall breakdown of what IWM consists of, it benefited from rotation into economically sensitive sectors like regional banks, banks or the financial sector as a whole, industrials, and energy. That's where we've seen money kind of hold consistently, which is why plays like PayPal, which is a mixture of finance sector and tech sector, XOM, energy. That's why those two have consistently remained on my watch list, at least for the past 3 weeks. Very similarly, when you take a look at the macro factors, you want to keep in mind that Federal Reserve meeting, the macro data that is set to come out. You want to keep in mind what bank stability, specifically regional bank stability, is looking like. There is a specific ETF, if you want to track that, called KRE, if I'm not mistaken. Overall, very similarly to Qs and SPY, when we take a look at those indicators, we're seeing the same thing happen, right? Indicators are being stacked on one another. The 50-day is a little bit more removed from the 100-day here, and they actually meet each other at this weekly level at around 180, 837. So we could see it just chill out here, consolidate just like SPY and Qs for the next day or so. But what I'm interested in seeing is the overall volume or momentum influx remaining at this interest to potentially build up for a breakthrough. So that's it with our indices for this week. We'll go ahead and dive into PayPal, XOM, and DIS. I've already done a full breakdown of PayPal and XOM, so we won't be charting those, but I do want to go over my reasoning behind why I'm looking into these, right? And let me go ahead and hide these drawings for now before we go into the 4 hour chart. But essentially, so some of the key things why, or really the biggest reason why I'm looking into PayPal is, one, because this was part of my personal holdings. It was part of my long term. I was very fortunate that I got to profit right around here, and now I'm interested in potentially coming back in and snapping up more shares for my initial entry point, right? So it is at a great valuation, I would say. PayPal has rebounded alongside the financial sector and has held up in relation to like fintech, its peers within that specific sector and overall, I think what I see it's reversing from oversold conditions ahead of its upcoming earnings report. So taking a look at this specific naked chart, what I'm looking at, right, and this is what you'll see when we go through the chart is this area right here, right, as my main target. I see this area right here. These are all just rough lines, right? When you think about eyeballing it or how I'm initially digesting a lot of this general area here. You see these two candles? That to me is significant. If we bring that across, what is it doing? Floors, those roofs. It's just rough, right? And then I see those two bodies right there. So just bring that across generally. And then that floor there. And that's essentially like how my brain's operating or how things are getting worked out when I'm looking at breaking down the overall price action. Like I stated previously, we're just looking at ranges, right? This is the floor of range one, the roof of range one, what we're currently trading in. It's starting to break, so this could become the floor, and then this could become the roof of range two, roof of range three, roof of range four, oh, roof of range six, and so on, right? But I'm not even, I right now at this point don't care about anything above here. I'm mainly looking at this, and I'll go ahead and provide you all a better breakdown or more in depth about what this is specifically. And I'm sure you can go back into the chart and go through that whole breakdown and see what specifically happened there. But I'll give you all more insight in the Discord. So definitely welcome you to bring that conversation up. As to me, this is very significant, but this is where I am aiming for not only just to trade options within the next few weeks, months throughout the year for PayPal specifically, but for my long term. If I'm going to snap up shares within this range, and I'm specifically aiming for around that 120, 130 ish range up here. This is specifically 126, but that's the zone I'm looking for, 20 to 125, 130 is what I'm aiming for. Now let me clean up this chart.
So when you're doing that, is it fair to say so you're identifying the top, the bottom, and then I guess any consolidation within that top and bottom range?
Exactly. Yeah. So that's exactly what's happening. You hit the nail on the head there. I'm just looking at the top, the bottoms, the floors, the roofs, and that consolidation between those tops and bottoms. That's where we start narrowing down the zones, right? So when you're taking a look at zones specifically, just overall, like a general definition of a demand zone is areas where price areas where buyers have shown a strong interest. It's where you see a floor being formed, right? Think of a demand zone as a magnet for the buyers when price comes down into that zone. It's where you see the candle wick away or a overall green candle build within that area. And it won't always be just one or two candles. If you extend, if you think this looks like a zone, I encourage you to outline it and do exactly what we did within the chart, right? So if I outline this specific zone here, well, you see I cut it off here, but what happens when I extend it? I really encourage you to do that and look at historical price action. It does not surprised me that we saw one bounce, two bounce, a wick into it, three bounce there, right? And this was from back in what is this, July of last year. And if I extended even further, what happened here? Back in what is this, the January of last year, it held right above it. It dipped into it. It dipped below it after market, but it held. It held, right? So that doesn't surprise me at all. You always want to look at the left side of the chart, right? Because that's the historical price action that you should be identifying. So that to me, when you're thinking about, well, are these supply demand zones, or and even just your support and resistance levels, are they valid? What makes it valid? Extended to the left. And if you don't see, if you see, like for instance, right here, right, it held. If I saw something where it was like price action, and actually let me annotate this again, right? If I it's not it. There we go. If I had seen candles build here, here, and it's just going like this, right? That I could have done better actually. If I see price action going like boop, that validates it, right? Because it's hitting, rejecting, bouncing, rejecting. That would validate it. But if I was seeing something more along the lines of this, I'm not really too confident in that zone, right? And especially if I'm bringing it to the left and I'm just not seeing that price build within those areas, then it would cause me to be hesitant. But that's what confirms it. Essentially, what I'm trying to get at is when you extend it to the left, check to see how price is reacting. Is it reacting very similarly where we've seen bounces in that area before? Because if you historically have seen bounces in that area, it means that there's buyers or people are interested in buying shares at that price. If you're seeing, and at some point, again, it could have been resistance, right? So if you go back and you saw it constantly reject, it doesn't mean that you should perceive that as resistance, right? If you're looking at something that would be a supply or a demand zone here. Sorry. I was pointing at this, but I was trying to have a conversation about this lower level here. So they do just change, but those zones are of interest, right? So that's where you know there's either buyers or sellers stacked up. I hope that kind of gives you a better or a little bit more in-depth understanding of it. And if it doesn't, just feel free to let me know.
It does. Thank you.
Okay. Awesome. And overall, like I said, to me, PayPal remains as a turnaround or recovery play. It is very deeply beaten down. If you take a look at the overall price action that it's had or all-time highs, it hit 310.16, right? And it's trading at what fraction or percentage would 60-ish be of that, right? It's what, like a fourth of it or a fifth of it. Just doing like a quick math in my head. So it's very much oversold and beaten down. So a few things happen here when you're seeing this sort of retracement. It reminds me of companies like Intel, right? Where PayPal was the first one to hit the market when it came to processing payments online, right? Do we know the story behind PayPal? Musk, Peter Thiel, and like all of these people that took part in it, they were the reason why eBay got big, right? And eBay's opportunity to take online or process online payments. So when I think about it, PayPal losing some of that market share as far as being a payment processor predominantly, a few things happen. Either they continue to innovate and they take back some of that market share, or they get bought out. And what I'm thinking about, like just when you try to structure scenarios in your mind, one of the biggest potential opportunities that comes to my mind is the opportunity for Elon Musk to at some point buy it back. and integrate it into X or whatever this all-in-one app that we talked about, potentially him building. That could happen. It wouldn't surprise me if at some point in time that were to occur. But we'll see how it plays out. Overall, lots of potential in the long term with PayPal itself. So we'll go ahead and move on to Exxon now. I do want to get an opportunity to,
Just a quick
yes,
question.
yeah.
So going back to how you were saying because it took you saying it for it to click because I know Elon's definitely trying to get the government to have like the payment processing through X and whatnot, and I could definitely see him instead of starting over just buy PayPal. So are you opting for shares instead of like a leap? I guess just because you feel like it may take it, I don't know, multiple years.
Yeah, and well, I don't really do go into leaps very frequently. And very much the reason being is that if I'm considering a leap, what I've done before, it has been like in relation to commodities. For leaps, the way that I think about it is I rather own the share, right? I rather own it because specifically PayPal, the potential for that buyout, or if I'm going to think about a leap, the overall price for it is going to be pretty significant. If you take a look at, let's take a look, PayPal specifically, and the pricing for, let's take a look at December, right, of 20, or even just a year from now. Let's take a look at June 26. Yeah, see those prices on the call side of things.
Yeah.
You're going to spend a couple $1,000s. So for me, my position in PayPal overall was $1,000. A little bit, it was like 1,200. So when I think about just the overall allocation of my funds, one contract that could potentially expire worthless in comparison to actually owning the shares. I rather own the shares because then what I can do is if I still think this is going to increase or it's going to decrease, whatever it might be over the long run, I'm just going to trade weekly option contracts on it to either hedge my shares or to what I typically like to do is if I know or if I see that bullish momentum, I'm going to go long on it. And as I collect profits from those longs, I'll just revert it back to the shares position. So I'll just keep adding to my position and dollar cost averaging myself in.
Okay. No, that definitely makes sense. Yeah, because I think I myself would be a bit bothered if I put in like a grand and then the week after my contract expired, it took off.
Right. Yeah, definitely it is that risk reward scenario, but I will always emphasize shares and in all honesty, I don't know if I've like made it very clear, but for me long term over everything. Over options contracts, over futures contracts for me the whole goal here is to build that long term, and the way that I see the options um, the options vehicle or instrument and the futures trading, they're all instruments to increase your positioning within the long term. And I hope that's something that you all are willing to do as well. Because yes, you can use options and futures or funded accounts to make it like a day-to-day or like a 9 to 5 per se, where you're just this is the money that you're living off of, and that's great. You can definitely do that, but you also want to make sure that the future is being secured. So I will always stress shares. Great question. I will go ahead. We'll take a look at XOM. Definitely very interested in The overall sentiment within energy as a whole, it's shown relative strength versus tech and small caps. When those have shown weakness, you start to see, or you could potentially see that stabilization of crude oil pricing, which to me is overall bullish for XOM. I'm not sure if you all remember the previous watch list, but they are currently building out new production facilities in the northern or northeastern part of Latin America around Venezuela. So lots of growth potentially there. They do have an earnings report coming up, if I'm not mistaken. It's on May 3rd, so it's not this Monday, but the following Monday should be, or no, I think May 3rd actually lands on a Saturday. So I have to recheck that, but it is here the first week of May that they are set to report their earnings. It does have two gap fills to the upside specifically. If we're taking a look here at the 4-hour chart, specifically between 110.79 to 112.32 is where you see that initial gap. So if we're taking a look here, right, you see this candle closed at this level here, and then it opened down here. So although you see this is a pre-market candle and this is an after market candle, so this area right here, that's actually a gap to the upside that it's potentially getting ready to fill. And then above that, very similarly, this is an aftermarket candle and this is a pre-market candle. So there's a gap from here down to here, right? And we can go ahead and give us that visual representation here. And we'll go ahead and make that white. So this area, that's actually a gap that needs to be filled as well. And just to give us the visual here of what we just touched on the lower end, smaller gap, but it's still an existing gap nonetheless. There, right? So two upside, and these can probably be filled in within the next, I would say, 2 to 3 weeks. This one next week, it could potentially fill depending on market, but this upside one, probably 2 to 3 weeks, just knowing how Exxon typically moves, ultimately dependent on its earnings report and whether it beats or not. One thing, or the reason why I say that is taking a look at this gap, right? It is or has been an area of interest in the past historically. And look at this rejection, right? This is an inverse head and shoulders before it popped up. So this could act as resistance, especially going into earnings. This is building a bear flag. So it could potentially test up here and just drop back down to the lower end of this range. But we'll see. We'll see how it reacts. For me, the main point that I'm looking at is 116. If we're looking at the upside, if we're looking at downside levels, probably 100. We could see about a 9 to 10 point or dollar drop there on XOM. So definitely a big thing to keep in mind are those upside gaps that needs to fill, but also the fact that it is ascending. It has seen higher lows and higher highs, but it is creating a bear flag. So big things to keep in mind. Now to wrap up the rest of our meeting here, we'll go through an entire breakdown of or Disney from bare bones. So as you can see, I haven't charted anything here, but I want to take a look at a few historical points, which is why I extend the entirety of my chart here. And actually, you can see my chart, right?
Yep.
Just to make sure, okay, because I just noticed typically it highlights my screen, but I wasn't seeing it, so I got a little worried there. I was like, man, I just went through this hour without showing my charts. Awesome. Let's go ahead, and what I'm looking at is all-time high is up here, right? All-time high is 254 by the looks of it. So I want to identify that all-time high range. And I am seeing it right above about there. Let's turn this to purple because it is our weekly that we're identifying, right? So you see how that was the floor, right? Of here where it tried to hold to the upside. The roof to me is where that whole candle started. So we'll go there. Then the high of that would be 250, the all-time high. So we can mark that and actually let's go ahead and put the exact. So it's 54 right there. So that there to me gives us my all-time high supply, right? We've only had a one candle touch in there and reject. Don't know when we'll touch that, but I just want to give that to myself so I know all-time high is up there. We just work our way down the chart. Where would you potentially put a midway point, right? Because I'm thinking about this range. This to me was the all-time high floor. This to me was the all-time high roof. So I'm seeing two things here. Let's go ahead and annotate this as well as we chart before I give you the exact level. So you know what I'm eyeing, right? Initially, I'm eyeing that rejection, and then I'm eyeing this floor here. Rejection, rejection, rejection. Right? So that's the first thing that I see there. So essentially, what we just identified there, what it's giving me, that's what I wanted, is the midway point between that roof and that floor. So when you're thinking about statistics or data, if you aren't looking at candles, I guarantee you that if you have a spreadsheet with all of the prices for be the candle price action between that floor and that roof, that midway, it's not going to be exactly this, but the midway point, it's probably going to be between these two, right? That average or the mean of that range is going to be right smack there. So you could identify that as a zone as well if you want to give yourself that area of interest too.
I think you were on the spy chart, but as far as the midway goes, so what kind of jumped out to me is like where May starts. There's like that little small candle, and
Wait,
then
you're seeing the spy chart right now?
no. I was just
Oh,
referencing because
okay, okay, yeah,
on
yeah.
one of the earlier charts you were saying you circled it was like a small candle followed by another long one, and that's kind of what jumped out to me. So like if you go to where the May like the May line is to the right
Here.
uh, to your like right where May well so on the bottom of your screen you have like the word May. Yeah, like right there. So I saw that small one and then I saw the long one. So I was thinking
Oh,
that's
yeah.
where the midline would be, and then just kind of where you drew it. So, but I didn't know if that was the same pattern that you circled during the earlier charts you showed us.
Yeah, and it's not always going to be the same pattern, but you're very yeah, this right here, it's a hammer candle, right? So it does show that upward momentum. So now when we're thinking about the lower range, that's exactly what I would also identify there. So if I'm not mistaken, this is the like generally you might have been talking about this area here, at least from what I understood. Oh, is this area what you were talking about here?
Yep.
Yeah, awesome. Yeah, you're spot on there. So yeah, when we're thinking about zones, because I initially had that level there as far as just like the level itself, but when we're talking about zones, we just broke down the entirety of that range on the all-time high range. So that you're exactly right. That is the zone that I would be looking at on the lower end of that range. Then we got the midpoint or the midway of that range, and then we got the high there. So for me, let me extend this. That is perfect as far as when I'm thinking about potentially getting shares and the potential push, that would be this lower floor of that all-time high range. That would be my initial point or price target to potentially take some profits, right? And then all I'm doing as we proceed through this, I'm just now going lower and lower, right? We got the upper range. So what are the other ranges that we see here? And I'll just go ahead and limit us. I won't go as far as 2019, right? This is what we've been collecting data up to. It's been May of 2019. So we'll just kind of keep it there for now. But as we've said, if you extend it, especially on these lower ends, as you extend it, they're all going to be very true points. So what I'm seeing here, and let's go ahead and annotate it now. If we're looking at the lower ranges, seeing this top here, I'm seeing this candle body here, right? For me, it was the push up and it separated it there. And if you bring that across, doesn't surprise me that it tried to hold here, rejected, pop, rejected, and it came down, right? So that's going to be an area of interest. If I extend that here, no wonder that's where that rejected. Bring that here to further refine it. Doesn't surprise me that we have that candle there, right? Doesn't surprise me that we have that range there. So what is this telling me? That this is potentially a zone of interest, right? That we're going to end up highlighting. What else am I seeing? I'm seeing this floor here, this floor here. Yes, this candle here doesn't necessarily, how do you say, outline it like it would here, where's the floor. But if we keep extending it, see that rejection, we see that basing there. You extend it, it was a floor there, right? You extend it more, it couldn't reach there. That's lower, but we extend it more. So you then have this lower one, this lower one, lower one, lower one. So keeping that in mind, it tells me that we probably have another zone being built around here, right? Drag it all the way. Well, doesn't surprise me that it's the base of that price action there. What else am I seeing? I'm seeing this lower area here, these general areas here, right? Seeing this floor here, that floor there, that floor there. So if I bring this $80 mark across the board, oh, that's exactly where these fall. It's exactly where these fall. These fall, but these aren't necessarily touching down here, right? So then what that tells me is if I'm going to analyze this level here right around the $90 mark, well, no surprise, right? That's where all of that price action is happening. So bringing it across this right here, that's going to be another zone. Does that do you all kind of see like how my thought process is happening or how I'm digesting this chart?
For me, yes, the pattern I'm noticing. So it's like I can, where you're circling, I can see where it's either, I guess, like resistance, and further down the line, you can see where it comes back to that area and rejects again, or there's like some form of consolidation. So that's kind of what I'm keying on. As far as how far back we should go when we do this, it seems like at a minimum we should look 3 years to the left. Or is that fair?
You can go as far back as possible, or as you can go as little far back as possible. I don't even know how to say it. You can go as far left as you want, or you can keep it as short as you want. However, the shorter amount of validation that those zones have, the easier they will be to break, right? Whether it's to the downside or the upside, or the easier it will be for that thesis or that thought that you might have for it to fail. I would say encompass as much data as you probably can. Especially looking at the weekly chart, right? You can drag it as far left as possible. It's very easy to do. But when you're taking a look at, and I encourage you, yeah, I would say at least 3 or so years, just for your own understanding of historically where price has been. But I could have easily I could have easily just cut it off here. Oh man, that's still like 5 years. 2020. But this is just specifically for dis. I guess is what I'm trying to say is that the charts will look different. So how far back you want to go is all dependent on the specific chart that you're looking at. And the reason that I had to go back this far is because this hasn't touched all-time highs since between 2020 to 21, right? So at a minimum, I just for my own understanding and knowing what is the absolute highest potential that it kind of has right now, it's this range. If I wanted to just trade a break into its current range, I would have only looked at this, right? I would have only looked as far as 22, where we saw this base rejection, 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 rejection. So if I'm only taking into consideration those specific data points, then I just want to trade a pop back up to here. Right. So I guess what I'm trying to say is that it's dependent on your overall plan. But if you want a full look and in-depth understanding of the entirety of it and to prepare yourself for the long term, right? Because these are points going back 5 to 6 years. These are going to be valid for a very long time. So for me, I know that now having charted this and having these specific levels, I don't have to like rechart my weekly or my 4 hour levels for a good amount of time, right? Until they're invalidated or until we see something, some sort of shift. So yeah, I would encourage 3 or so years if you have the opportunity to do that.
That makes sense. Thank you.
Yep. So I'll go ahead and mark those areas that we had talked about. Um, And I don't know if you've noticed, but sometimes when like I have my cursor, like it'll automatically just like pinpoint an area. So different platforms will have different opportunities, but here you see the magnet mode that I have for Weeble specifically, even if I'm like, let's say that I have let's see if it does this. I'm just gonna randomly put it there. No, and it did snap it there. So what it does with magnet mode, it's reading all of the price points and it's giving you that ideal price level between or between all the data where your cursor is currently finding itself. So sometimes it'll just snap and it'll pinpoint something that I don't necessarily want, right? Like there, it went up here, but I actually wanted that level to be a little bit lower because I wanted to encompass these candle bodies specifically. So sometimes the platforms will have those types of functions. And I bring that up because it could be beneficial if you're unsure, like, oh, where should I be putting this specifically? If you have magnet mode on, odds are that it's going to give you a pretty decent level or ranges that you could potentially be looking at. So let me finish that out before I outline the specific zones. Sweet. Yeah, and like I said, as how far back you go, it is ultimately dependent on the specific chart where you see price currently trading, things along those lines. So being that we've seen this low of 77, 77 there, and I pull it back, right, it touched there. I can see that that price was actually established first back in 2014, right? So at this point, I'm going back like 11 years, and I won't necessarily, I'll chart one lower low because that's the low of like current trend. So worst case scenario, I do want to prepare myself for potential a drop but below those levels, right? So I can go ahead and identify one lower range, and I actually don't want it there. I want the top. I see the split of that range being there. I don't want it there. I want it up here. So I'll give myself those two lower levels, not necessarily thinking, and actually I'll give myself a third. Not necessarily thinking that price is going to come down as low as 59.95, essentially 60, but just as potential markers to know that it could come down to that low. And when I'm thinking about that zone now, right? Identifying that weekly range. I like this here. And we'll pull it to the right and you will see why that initial range is important. And this is from 2014. Got that bounce there, dip and bounce in 2020. Here in 2023. And it's exactly where we touched and bounced here, April 11th, 2025. So that to me is a very valid zone there. We're then picking out zones within this general area. I like this right there, right? And And the reason why I hopped up from here all the way up here is that again, when I'm taking a look at this, I'm looking at ranges, right? This range here, the drop, bounce, rejection. Yes, it popped, but then it rejected before it popped. And then I see it was a base there, and then it became resistance there. So I pull that across. For me, when I'm taking a look at the weekly chart, that's the range that we're currently trading within. A range of 77, 77, all the way up to about 125-ish is the weekly or the long range that we've been consolidating in now for, geez, what is that? That's 3 years, right? Exactly three years and like a week that we've consolidated between this range. So this is what I'm looking at on the weekly level. We will go ahead and have the 4 hour breakdown further in depth within the Discord group. So definitely keep an eye out for that. But I do want to wrap up our meeting here and ask you if you have any questions about the breakdown of Disney, because we just did the whole breakdown, um, not only support and resistances, but those zones that are mainly of interest. We broke it down into the all-time high range, this lower range, which established itself between 2020 to or 2020 to 2022. And now we've been stuck in a range from 2022 to current day. So if you take a look at price action itself, it just develop that understanding of how uh, long does Disney typically find itself consolidating or ranging, right? 2019 to about 2020, and then 2020 um, to about late 2020. Then we see this pop here between late 2020 to late 2021. So you've seen it range or consolidate within a year to 2 year time frames. So for me now seeing a 3 year consolidation here, it makes me confident, or it makes me think that there's probably going to be a really significant move when it either breaks to the upside or the downside. Any questions? Awesome. I will go ahead and stop the recording here.